Right now, while 90% of crypto retail is panic, selling their bags and staring at red candles, an elite group of Wall Street insiders is executing the largest liquidity grab in XRP history. If you are looking at these minor dips and thinking about hitting that sell button, take your hands off the keyboard and watch this video until the very end. The multi-year war with the SEC is officially over. Ripple just dropped a massive $1.25 billion in cash to acquire one of the biggest prime brokers on Wall Street. And spot ETFs are currently draining $7.5 million off the exchanges every single day. Today, March 6th, 2026, we are at the ultimate inflection point. I'm going to show you the hidden on-chain whale metrics, the exact Fibonacci levels, and exactly why XRP hovering around $1.43 is a tightly coiled spring ready to snap. Let's dive in. Let's ignore the Twitter noise for a second and look at the raw, undeniable blockchain data. You guys know I always follow the smart money. Just days ago, our analytics flagged a massive anomaly in the age consumed metric. For those who don't know, this tracks the movement of old, dormant coins. When this metric spikes to the moon, it means long-term holders and whales are finally waking up and moving their capital. Historically, this happens right before a massive macro trend reversal. And guess what they are doing? They are not selling. Our data shows that wallets holding between 10 and 100 million XRP aggressively scooped up over 170 million new tokens during last week's dump. So while the retail crowd was crying over the scheduled monthly escrow unlock, which, by the way, was mostly locked right back up, the whales were just placing their limit orders and taking your bags at a heavy discount. Crypto Twitter is even exploding today, with rumors that US political elites quietly bought 15 million worth of XRP in anticipation of new stablecoin regulations. The single biggest psychological barrier that has been suffocating XRP for years has finally been annihilated. The SEC and Ripple have officially withdrawn all their appeals. That's it, it's done. No more lawsuits, no more massive fines, and no more unregistered security labels hovering over the asset. But what does this actually mean in the real world? It means that any Tier 1 bank in the US or Europe can now legally integrate the XRP ledger into their cross-border payment corridors without the fear of regulatory backlash. This is the ultimate green light for full-scale ISO 20022 implementation. The market is no longer pricing in legal risks, it's finally pricing in utility. And this brings us to the most critical piece of the puzzle. The one thing that 99% of crypto influencers are completely missing right now. Just days ago, Ripple closed a deal to acquire the prime brokerage firm Hidden Road for $1.25 billion. Why on earth does a Web3 blockchain company need a traditional Wall Street prime broker? Imagine you are a traditional hedge fund with $10 billion in AUM. You are not going to sit there with a Ledger Nano and trade through MetaMask. You need a highly regulated institutional middleman that provides clearing, lending, and cross-margining services. By acquiring Hidden Road, Ripple has essentially built Ripple Prime. Now, traditional megafunds can enter crypto and utilize the RLUSD stablecoin directly on the XRP ledger without even realizing they are interacting with Web3 infrastructure. This is a Trojan horse designed to funnel trillions of dollars of traditional finance liquidity straight into the XRP ecosystem. Alright, let's turn off our emotions and look at the charts. Since late January, we have been trapped inside a massive symmetrical triangle, and price action has now reached the absolute apex. Let's pull up our Fibonacci retracement levels. Look at this concrete foundation at the bottom of the 1.27 mark. This is our 23.6% fib level. Just yesterday, we saw price wick down to test the 1.36 level, and it immediately bounced like it hit a brick wall, leaving a massive wick. Institutional limit orders are stacked so heavily in this zone that they simply refuse to let the price collapse. But our main target is above us. Right now, XRP is fighting local resistance at 1.46. However, the ultimate trigger the level that will force trading algorithms globally to buy at market prices, 1.51. That is the 61.8% golden ratio. The moment we get a daily candle close above 1.51, this local bearish structure is officially invalidated. Now I know exactly what the bears are thinking. You are looking at the 50-day and 200-day moving averages and seeing that we are trading below them. You see the MACD indicator completely flatlining at the zero line. Technically, it looks weak, and that is exactly why retail is terrified to buy. And guys, this is a textbook whale trap. While these lagging indicators sleep, we are seeing an unprecedented supply shock on the exchanges due to ETF accumulation. If you want to see the difference between a fundamentally strong asset and a retail trap, look at the SUI token. Yes, they just got their spot ETF approved. But right now, in March, SUI investors are facing a catastrophic token unlock worth $48.6 million. Early VCs are about to dump millions of tokens straight onto retail heads. Meanwhile, XRP's circulating supply is being locked away in institutional cold storage. Now, before I give you my exact price targets and exit strategy, I need to expose the biggest catalyst that the entire crypto space is completely ignoring right now. Everyone is still talking about XRP as just a cross-border payment coin. Guys, that is the 2017 narrative. Wake up. What Ripple is actually building with the Hidden Road acquisition and the death of the SEC lawsuit is a monopolistic empire for real-world asset tokenization, or RWAs. We are talking about a paradigm shift that makes cross-border remittances look like absolute pocket change. For years, Wall Street megabanks wanted to tokenize real estate, treasury bills, and corporate debt on the XRP ledger because of its speed and microscopic fees. But they couldn't. Why? Because the SEC was breathing down their necks. Now that the regulatory chokehold is officially dead, the floodgates are wide open. Based on the institutional capital flows we are tracking right now, my conservative projection is that the XRPL will host between $2 to $3 billion in tokenized RWAs by the mid to late 2026. But how are they going to settle billions of dollars in tokenized stocks and bonds without dealing with the price volatility of crypto? Enter RLUSD Ripple's natively built regulatory compliant stablecoin. Wall Street hedge funds don't want to trade on public, Wild West crypto exchanges. They want permissioned decentralized exchanges, DEXs, with KYC and compliance tools built directly into the protocol. Ripple is giving them exactly that. Institutions will use Hidden Road to access these permissioned AMMs, trading billions of dollars in tokenized assets using RLUSD as the base pair. And here is the kicker that will melt your brain. Every single time a hedge fund executes a smart contract, trades a tokenized treasury bill, or moves RLUSD across the network, what happens? A fraction of XRP is permanently burned as a network transaction fee. Do the math. We have ETFs sucking up $7.5 million of XRP a day. We have retail holding their bags. And now, we are about to plug a multi-trillion-dollar traditional finance machine into the XRP ledger that will systematically burn the remaining circulating supply. This isn't just a technical breakout. This is a mathematically guaranteed deflationary supply shock. So here is my game plan. My invalidation zone is a breakdown below 1.28. If we lose that, we likely go down to test the psychological $1 mark. But if we hold the line, the next stop is smashing through that golden pocket at 1.51. Once we clear that level, we enter a massive liquidity void, all the way up to the historical resistance wall at 1.76 to 1.8. There are nearly 2 billion tokens sitting in that zone from old bag holders, praying to break even. It's going to be an epic battle between exhausted retail sellers and Wall Street hedge funds hungry for volume. And I'm betting on Wall Street. The market does not reward fear. While you hesitate, institutions accumulate. Let me know in the comments below. Are you holding your XRP tight? Or did you get shaken out by the recent dips? Smash that like button, hit subscribe, and turn on the bell notification because the volatility this week is going to be insane. I'll see you in the next one.